The last couple of days, we have seen a new TDS rule come into the picture, and second, lots of tax reliefs announced by the government for taxpayers, right from easing income tax compliance to relief measures in terms of payments received during COVID to get over a financial crisis. So what exactly are these, and what should taxpayers brace themselves for? To talk about this and more, and of course answer your questions and queries, I have with me Preeti Khurana. She's the Chief Editor for Clear Tax. Preeti, thank you so much for taking our time and joining us. Great to have you back as well with us on the Money Show. So Preeti, to start with, let's talk about the rule with respect to TDS. Just if our viewers are not aware of it, let's start by what exactly is the new regulation introduced with respect to TDS?
Sure. So first, as a concept, TDS is basically tax deducted at source, which means that whenever somebody is making a payment to you, they are supposed to deduct certain taxes and deposit with the government. Now, what the government has done is that they've brought in two new sections in the Income Tax Act, and these are Section 206AB and 206CCA. Now, what these sections say is that if the TDS that is being collected from you or deducted from you. So remember these sections apply not only to TDS, but also to TCS, and TCS is tax collected at source. It's applicable when you're buying a vehicle which costs more than rupees 10 lakhs, or if you're buying jewelry based on certain conditions. So if you are a person whose TDS or TCS exceeds rupees 50,000 in 2 previous years, so you have to look at both the years. Each of the years, if it exceeds rupees 50,000 and you have not filed your tax returns for those 2 years, then you may be subjected to a higher rate of TDS. Just to put it more simply, if you're somebody who's not filing tax returns and you have a TDS of more than rupees 50,000 in any of the 2 previous years, then you will be subjected to a higher rate of TDS. Now, what a lot of people are asking is, what am I supposed to do as a recipient? If somebody is paying to me, what is the compliance that I'm supposed to do? So actually, the onus of compliance with these sections has been put on the payer, the deductor, the one who's making the payment to you. So whoever is making a payment will ensure that they have verified whether you filed tax returns for the past 2 years or not. If you haven't, you may face a higher rate of TDS. Nothing to worry on that. You can file your tax return and go and claim a refund if you're not supposed to pay any taxes, because either your income is exempt or you're below the taxable limit. Whatever may be the situation, you can file your tax returns and claim a tax refund, and the onus of compliance is on the deductor. So if you're someone who's making a payment, you'll have to make sure that such a person explore whether this person is covered or not, and make sure that you apply a higher rate of TDS if they have not filed their tax returns.
So if you are a deductor or a payer, if you're a payer, obviously you will be the deductor because you will have to deduct the tax at source. Then you will have to ensure compliance. And of course, you may wonder that how would I know that if, the person who have to pay the money to, the fees or the rent or whatever it may be, has filed his return or not, his or her return or not. Well, for that, the department as well has introduced, a section on the website. You can just punch in the PAN number of the recipient and you can check whether he or she is compliant with that rule, whether they've been filing their returns or not. Now, let's assume that I am the recipient of the money and, I noticed that, okay, I have missed filing my return for the last 2 years, like you said, which is a requirement. Preeti, what is the corrective action that I can take? Is there any corrective action I can take?
Sure. So this rule has come into force from 1st July 2021. And when we say 2 previous years, then we are actually referring to financial year 2018-19 and 19-20. So these are the 2 years for which your PAN will be tested. And the deductor will check whether you filed a tax return or not. But the last date to file tax returns for both these years has already elapsed. And therefore, there is no option for you to go and file a tax return. You cannot do that anymore. You might have to face a higher TDS, but like I said, you can file a tax return for 2021, and then you can adjust the TDS the way you want to. In fact, the section only applies in case the last date has already gone by. So if there is still time to file your tax return, then the section understands that you have that option and you should go and file your tax return so that you don't face a higher rate of TDS. But for the current year, for the ongoing year, whatever payments you are receiving, if you fall under these sections, unfortunately, you cannot go and file your tax returns. You have to face that higher rate of TDS.
Okay. Well, maybe next year and then next to next year, as you start complying and you file your income tax return, you can expect some reprieve. All right, well, that of course is the not so great part for taxpayers, if you could call it that, or at least for those who are not complying. For those who any which way has been filing the return, it should really not make a difference to you. But now let's talk about some of the relief measures announced by the Finance Ministry and by the Income Tax Department. A lot with respect to COVID-19. Many families have, of course, been through tough times. They've had a member of their family being hospitalized, they themselves being hospitalized, having to deal with those hospital bills as well. Now, the department has taken cognizance of that. So tell our viewers, Preeti, especially those who have received some cash benefit from their family members, maybe from their employer as well, what is the tax benefits available for them?
Sure. So if we look at the Income Tax Act, it does not cover for any payments that you receive from others or any money that you receive. They may be exempt from tax in a certain situation where they are considered as gifts. But normally, if you're receiving more than 50,000 rupees in a year, those are considered as cash gifts, or even if you're receiving other gifts, you have to pay tax on such receipts. But what the government has done now is that if you are a person who has taken money from friends and relatives or other people, even your employer, for your own medical treatment, then whatever money you have received, it should not be subjected to any tax. Now, what this means is that in the normal scenario, if you're receiving money from other people, which you're not going to return, on which you're not paying any interest, those may be construed as gifts in normal parlance or in normal taxation. But because a lot of people may have to take financial assistance, and therefore that money that you have received towards medical treatment has been entirely exempted. It will not be taxable in your hands. Of course, it's not taxable for the giver and also for the recipient. Now, coming to those who have received ex gratia. So if unfortunately someone has passed away in the family and you receive money from the employer, then whatever ex gratia, the way it is called, if you're receiving that money will be exempt completely from tax, no tax liabilities. But if you're receiving money from others, say friends and family, and there has been a lot of trauma and people have been helping out, especially college mates, schoolmates, and they've been gathering funds. So all of that will be exempt till rupees 10 lakhs. So there is a cap on what you're receiving from others, but from the employers, it's going to be completely free from tax.
Just to remind our viewers again that if it was in any other scenario, if you had got money, you would have to pay tax on that. But in this case, just so that taxpayers are not, stressed further, no income tax liability will arise in case if the individual has received financial help from employers or well-wishers. There is a cap, for the amount received on well-wishers, but especially if it's ex gratia, then the entire financial assistance received by the individual or his or her family is completely tax exempt. Okay, so that's with respect to the ex gratia payments or the financial assistance received. Preeti, does the individual have to disclose it anywhere on their income tax return to ensure there's complete compliance?
Well, it would be advisable to make that disclosure. And I just want to remind the viewers that this is applicable for financial year 1920 and subsequent years. So don't worry about when you have received that money. If you're going to be filing your tax returns or if you're questioned, then you should be able to support the source of that money and perhaps even the utilization. And therefore, if it's a large sum, then I may advise them to report this amount in their tax returns, because the income tax department has been reviewing people's transactions, bank accounts, and if they see a large entry in your bank account, then it would be advisable to report it. But if it's a small amount, if something that you have received and you've already spent, then you may choose not to include it. But large sums must definitely be reported, although there is no such requirement, and right now there is no such special cell where you're supposed to report that amount. But just to be on the safe side, to make sure that if you receive queries, those are addressed properly. So keep all proper documentation, have proper records, so that you're able to disclose what is the source and what is the purpose of these kind of receipts.
All right. So yeah, always ensure that you've kept all proper documentation, nothing's gone haywire, just so you know that you have, an answer of sorts for any thing that may come around in the future in terms of a question from the Income Tax Department. Let's talk about deadlines and deadlines for tax compliance. Preeti, anything noteworthy over there? Any significant deadlines that have been extended, which is of course applicable to most of our individual taxpayers?
I think one deadline that we must talk about is the due date for filing your tax returns. That has been extended. Now it's 30th September 2021, so there's enough time. Then there is an extension for receiving your Form 16s. The due date has been extended till 31st July. So most of us have not received our Form 16, and we will receive them in due course. If you are somebody who's claiming a capital gains exemption under Section 54 to 54 GB, and these are the ones that relate to claiming capital gains exemption if you've sold a residential property or if you've sold another long-term capital asset, where you wanted to invest that money or you wanted to deposit the money in a capital gains account scheme and could not do it because of the COVID situation, the timeline for that has also been extended. Now you can go and deposit that money by 30th September 2021. But do remember that the actual date for you to deposit that money should have been between 1st April and 29th September. So if it's a genuine case of hardship, if you've not been able to make those deposits, if you've not been able to buy a new asset, then you can do that in the current period and still be eligible to claim a capital gains exemption.
Preeti, I wanted to also ask you about your experience dealing with the new income tax website. We've heard enough about, how it doesn't load, and how logins don't work, or how the capture code doesn't work, etc. So I'm sure the government will get over all of those initial hiccups, which usually are seen, especially because our load is so much, right? We're a huge population. But what's been your experience so far with the website? And actually, if you could talk to us about some of the key outstanding features which you think are going to be particularly helpful for viewers.
I think this is a very interesting conversation, because ultimately we have to look at what is the objective of the government. The government wants to provide taxpayers a very seamless experience of doing their taxes. Now, across the world, it is very well known that if you simplify the process, the compliance process, then compliance improves. So the objective is that, of course, there are going to be hiccups along the way. There will be issues along the way. And we can see that the government has been focused on resolving these issues, on ensuring that chartered accountants and taxpayers have a website that they can use to comply. So, we see that there have been a few hiccups, but we are hopeful that, in due course, those will be resolved. Now, what the government is really trying to do with the new website is give users a very smooth and easy experience. They want taxpayers to be able to see most of their TDS, their transactions, their high value investments, all of that populated onto a single software. So taxpayers will be able to view their transactions, including perhaps even capital gains. So if they've sold equity shares, if they've sold mutual funds, then in due course, in some time, hopefully they will be able to see those transactions. Dividend income will now start to flow through into your Form 26AS. Any other kind of TDS already gets reported. You will have high value transactions. And all of this information will be available not only to the tax officer, but also to you. So you will have full window into what is the kind of information that the department has about me, and the tax officer will have information about you. And that is the whole objective, that they want to simplify the experience. And they're also building other functionalities, which they're going to disclose in due course. So all in all, my view is that this is definitely an excellent move. We are hopeful that this will help people comply in a better way. But remember that while all of these functionalities will be available, ultimately the onus of ensuring that your return is accurate is on you. So the taxpayer has to make sure that whatever information they are reporting, it may have been populated from another system or by the tax department, but the accuracy has to be verified by you. So you still have to be sure about what you're reporting, where that income is coming from, where that particular TDS has come from. So perhaps taxpayers will, might have to spend slightly more time doing their disclosures, but the information will be collectively available to them at one place. So this is definitely an excellent move. There are hiccups, there are issues that especially professionals are facing because they're not able to file certain mandatory forms right now. And we are hopeful that all of that will be resolved in due course.
Okay, well, yes, that's the hope that all of those initial hiccups will be sorted. Well, Preeti, we'll wait for that. But for now, let's do one thing. Let's take on board some questions and queries that we've received from our viewers. Let me remind our viewers that you can connect with us by writing in on themoneyshow@etnow.tv. That's our email address. So for now, let's answer some questions already received. The first one is, okay, the first question, let me just take our viewers through that. Okay, this is a very interesting one. It has come in from, right, it's come in from the, from Tushar Y. He says, I'm going to incur more than 1 lakh rupees of short-term gains in stocks, which he's held for under 1 year. Does it matter how much my income slab is while deciding the tax on these earnings? All right, so it's short-term capital gains. He's very clear on that. Preeti, what is the income tax liability he'll have to pay if his STCG, as it's called, is more than 1 lakh?
So if you have any short-term capital gains, then you have to pay tax at the rate of 15%, plus whatever is applicable cess and surcharge. Now, I just want to point out that if you're a resident in India, and I'm assuming that you don't have, let's say you don't have any other income, and you are resident in India, then you're eligible to claim a basic exemption limit of rupees 2.5 lakhs if you're less than 60 years old. And in such a situation, you can knock off that exemption limit against this short-term capital gain, and you may not pay any tax, but the condition remains that you should be resident. The other important aspect is that these are short-term capital gains. So if you've had any loss, then you will be allowed short-term capital loss, then you'll be allowed to set that off from these gains. So do a proper computation, look up whatever your gains and losses are, see what your basic exemption limit is, and identify all the other incomes that you may have. And of course, whatever short-term capital gains that you have, which are taxable, are going to be taxed at the rate of 15%. And this is irrespective of which particular tax slab you fall under.
All right, there you have it. That's the word coming in terms of how your short-term capital gains that you enjoy on stocks are taxed. Okay, here's a very interesting question from Mr. MD Matthew. He says, recently I paid my second call money on Reliance partly paid shares, which was recently announced. Now he says, in my Demat account, the partly paid shares were debited first and later shares were credited with the call amount that he paid. And in the process, he generated capital gains, even though he's technically obviously not sold the shares. So how does it work then in such a situation? What happens when partly paid share money is called? Is this something normal where, shares are debited and then later credited? Do you think that Matthew should perhaps approach his Demat account on why this happened, or will he have an income tax liability?
Well, actually, this might have resulted in a capital gains tax situation for this person. So he has to look at what was the amount that was additionally received, for how long he has held those shares on which this money was paid. If it was beyond a year, then these are long-term gains. Otherwise, these are short-term capital gains, and you have to pay tax on whatever excess that has been credited to you. The value of that, you're supposed to consider those as capital gains.
Okay, interesting. Okay, well, I think that's all the time we'll have to take on board some questions, as well. Preeti, we leave it at that. Thank you so much, as always, for joining us and helping out our viewers with their questions and queries. Really appreciate you joining in.